how did U.S. stocks perform in 2025? Let's look at the following illustration to see a clear picture of what happened. Here we have the U.S. stock index as represented by the S&P 500, which we can see is red on our screen at 5,800. As we start, we're off to the races. We see a up and then down, and then we have some zigzags in January, peaking around 6,000. And then in February, we have some more zigzagging. We get above 6,000. Afterwards, we start a downward trend, which bottoms out in early April due to tariff concerns, concluding with our president's self-proclaimed Liberation Day. In this situation, if you're close to retirement and you see the stock index drop almost 19%, you may think to yourself, can I retire on time? Is my plan derailed? Do I need to continue to work into the future, which I would prefer not to do? And even if you're not close to retirement, you may think, how much more of this can I stomach? However, let's see where we go from here for the rest of the year. If we pick back where we left off and continue, we'll see that starting in April and going on, we have a pretty quick climb. So we essentially erase all the negative downturn that we had from the second half of February due to the tariffs. And then we are just really cruising up and up and up. And then we can see in the fall, there is a little bit of a dip with the government shutdown looming. And then it really just rebounds back through December to a final number of 6,800. So we are up for the year around 17%. And it's pretty wild to think that we were up that much given how much we were down at the beginning. It's all a matter of perspective. Looking at a longer time period versus a shorter time period will typically give you a higher probability at positive returns. This is why looking at your investments frequently, such as daily or weekly, will paint a very different picture from looking at them infrequently, such as annually. Thanks for watching, and I look forward to seeing you in our next video. Have a great day.